Okay, so in this video, we're going to do the application. How do you apply when you are given a scenario? So I think I did explain. To say step number one, you identify the issue. Step number two, you provide the definition. Step number three, you apply the definition. Step number four, you do recognition criteria. Step number five, you do the conclusion. So let's say now you are dealing with an asset. So how do you apply asset? That's your step number three. So here we're dealing with the asset. So when you do the application for asset, what do? Number one, you need to discuss the right, and then what is the right are we talking about? It's the right to receive or use something. Then the right to receive the service. So you must have a right to use or receive the service. Number two, you discuss potential to produce economic benefits. So what is the potential? It means that as you use this asset, the end goal should be to receive money. So you should be able to receive money. That's the potential to produce economic benefits. So you should be able to receive money in the future with that asset that you bought. Number three, you discuss control. So what is the control? So the control could arise from contract, or you're the only one who can control that asset, right? So the control can rise from the contract, or you're the only one to control the asset. Then the last thing, you discuss the past event. So with the past event, it's the date where or the time where the transaction began or the case happened, where it started, right? So if you bought an asset, would be the date you bought the asset. If you employed someone, would be the date you have employed the employee. So it's the date where things happened, where they started. That's the past event, right? So this is how you do the application for asset. That's step number three. So you discuss the right. What is the right? The right to receive or use something. Number two, you discuss the potential to produce economic benefits, then control and the past event, right? So this is how you apply your definition. That's step number three. Four. So this was the application for asset. So step number three, you discuss the right, potential to produce economic benefit, control, past event. Then you know step number four, you do your recognition criteria, and with your recognition criteria with the relevancy and faithful representation. That's what's for asset. So let's look at the liability. How do you apply liability? Step number three, remember you have step number one, step number two, step number three. Step number one, you identify the issue. Step number three, you provide the definition of the liability. Step number three, you apply the definition. So when we're dealing with the liability, application for liability. So what is the first thing that you discuss? You discuss a present obligation, right? So what do you write here? You write if the organization or the entity has got alternative or not. So you would state to say the company does not have an alternative but to pay for that liability. So that's what you discuss. Number 2, you discuss transfer economic resource. So you must stand a chance to lose the money or to transfer money. So for an example, if you took a loan from the bank, so your present obligation would be to pay the bank. You don't have an alternative. So you would say the organization does not have an alternative but to pay the bank. Then what would be the transfer of economic resource? Your monthly payments or your annual payment will be representing the transfer of economic resource. Number 3, we discuss your past event. So your past event, I explained, would be the day you receive the loan or the day you sign an agreement for you to receive the loan. That's how you apply the application for liability. So these are the only things that you apply: your present obligation, the transfer of economic resource, and the past event. Right? And then we also have an expense. So what do we do? Step number 3, the application. So how do you apply an expense? So you're going to write, first thing you discuss, decrease assets or increases liabilities. So this is the first thing we discuss here. If the expense increases what? A liability. For an example, salaries, we know that the expenses, right? So when you pay salaries, your bank decreases on the credit side. So let's say we were paying salaries. So we're gonna say salaries paid decreases assets. How does it decrease the asset? Through the bank. So that's how you apply. So it must fit on this definition of decreases assets or increases liability. Number 2, when you go back to the definition, we also discuss decrease in equity. So here you also explain to say salaries decreases equity. No, salaries paid, sorry. You're gonna say salaries paid decreases what? Equity. So on your expense, you discuss decreases assets or increases liabilities. Then you also discuss decrease in equity. Then the last thing that you discuss, it's distribution to equity holders. So you find these things in your definition when you check the definition of an expense. So here you're gonna say salaries paid does not represent distribution to equity holders. So there's only one item that represents the distribution, which is your dividends. So you're gonna say salaries paid does not represent the distribution to equity holders. So that's how you apply your expense. Number 1, you explain decrease or increase liabilities. So with this example, we're gonna say salaries paid decreases assets. And then second application, it's decrease in equity. So when we pay salaries, they decrease our equity because it's an expense. Distribution to equity, your salaries are not distribution to the equity, right? That's how you apply your expense definition. Then we have got the income. So with income application, let's see what you write. So you're gonna say it increases. These things I find it on the definition. So you're gonna say decreases assets, or increases asset or decreases liabilities. So that's the definition for assets. We find it there. For an example, let's say we receive rent from the tenant. So that means the bank increases. So you're gonna say rent income increases assets. How does it increase the assets? Through the bank, because we have received the money. So that's what you write there. Number 2, you're gonna say increase in equity. How does the rent increase the equity? Because it's an income and our income increases our equity. And you know that your incomes, they always increase your equity, unlike the expenses. So you're gonna say rent income increases equity. That's how you apply. So it's just the opposite of your expense. Then you're gonna say contributions from equity holders. So here you do the same thing. You're gonna say rent income does not represent contributions from equity holders. And you will forgive my handwriting, it's very bad. So this is how you apply. So watch the videos, all of them, the first video and this video, or then you'll understand that we have got 5 elements, and then you need to know the definition, and then you need to apply all those definitions. And then I explain the application. Step number 1, you identify the issue. Step number 2, you provide the definition of that particular element. Step number 3, you apply the definition of that element. Step number 3, you discuss your relevance and you discuss your faithful representation. On relevance, you explain the existence if the asset or any element exists, whatever that the case might be. It depends on the question that you are given. Then faithful representation, you indicate the amount that is stipulated on the scenario. Then step number 5, you conclude if an element should be recognized. Remember, in step number 5, in order for an element to be recognized, it must be able to meet the definition and the recognition criteria. So if it doesn't meet one, you would stay to say, this scenario does not meet the definition of the asset, but it does meet the recognition criteria. Therefore, we cannot recognize. So in order for you to recognize an element in the financial statements, it must be able to meet the definition and the recognition criteria.